all, thanks to a little irritation in my throat for all the viewers who've been asking where I have been. But yes, it's good to be back, and it's good to see what the markets are also doing.
Please do enlighten us. What are the markets?
Yes, markets, if you look at it, is actually jumping in trade today. A great Friday coming in for the markets. Remember what a spectacular turnaround, a dramatic turnaround we saw in the US markets after it actually slumped at open on back of that hotter than expected CPI inflation data. But from there on, you saw a spectacular rally coming in on all of the three US indices, be it Dow, S&P 500 as well as NASDAQ. Almost 5% uptick from the day's lowest point coming in for the benchmark indices in the United States. And that's trickled down to our Indian markets as well. SGX Nifty did indicate we will start with a gap up start, and that's indeed how it is played out. Right now you have Nifty that is above that 17,250 mark. You have Sensex that is trading higher by about 970 points. Nifty Bank is trading higher by about 1.8% as we speak. So good strength, show of strength in the markets, and that you can see even in the Nifty index. Out of the 50 Nifty stocks, you have only one that is in marginally in the negative territory, and that is ONGC, that is actually trading flat with a negative bias as we speak. Let me talk about the gainers, and the top three gainers on the Nifty index as we speak are from the IT pack. It is HCL Tech, Infosys, Tech Mahindra. They are the top Nifty gainers, followed by L&T and HDFC Twins as well. Let me just take you through what are the other sectoral indices doing in trade today. And if you look at it, all the sectoral indices are in the positive territory. The Realty Index is the only one that is gaining least in trade. IT Index, no point for guessing, that's the top sectoral gainer in today's trading session. Followed by, you have a good strength being shown in the PSU Bank Index, the Metal Index as well. And the broader markets are also trading with gains, but not as much as the benchmark indices. So that's how the market is looking like, Adiraj, and a great Friday looks like it for the large trade as of now.
Right.
But let's bring on board Kunal, and why we're bringing on board Kunal right at the top of the show, Adiraj, is because it's Friday, and every Friday we have a special segment, and that is BNSN Pathshala. Basically a segment where you can learn more about technical analysis. And Kunal, very good morning to you. And what new do you have for us today, and what are you teaching us on the Pathshala today?
Good morning, Cheryl, as well as Adiraj, and thank you so much for that. So today's topic, which I have, is more of an extension of what we've done over the last few sessions of Pathshala. Last few sessions we discussed about the triangular patterns on the indices, the flag pattern. Today's topic, what we have, is a pennant formation. So first, let us see what is actually a pennant formation and how does it get spotted into the charts. A very simple way to look at a pennant formation is the first kind of a trend, an upward trend. This is a bullish pennant formation. So the prices enter into a very strong kind of an uptrend, gets into a consolidation. The consolidation is interesting because here the stock is actually making a lower low as well as a higher high for itself, something which is completely contrast to a trend kind of a direction, which means that the stock price or the stock gets into a bit of a consolidation, the range gets narrowed, and then when you see a breakout happening for the stock after this phase of a consolidation, we expect the stock to move up higher in the same kind of a trend in which it entered into the consolidation. So this is a typical way of looking at how a bullish pennant formation actually looks like. I have two examples in terms of stocks where we recently spotted a bullish pennant formation and we've given a buy call. The most recent one was CAMS, where the stock moved up higher. So as you can see, the stock forming a base at the 2100, 2150 mark, moving up higher, getting into a consolidation. As you can see that the consolidation was a bit more tighter for CAMS over here. And once the stock confirmed a breakout about the 2500 mark, that's where I've started to give buy calls. From here on, we've seen a very sharp jump. The stock moved up to almost 2700 in a matter of just 3 or 4 trading session. So this is the classical sign of a bullish pennant formation. The second chart was again a very recent kind of a chart which is spotted out. That was for Omax Auto. Again, a very classical kind of a formation, because here what is interesting is not just the prices moving up higher in the entering towards the pennant formation, the stock consolidating, but the volumes moving up significantly in terms of the exact characteristic what we look out for. So entering into the pennant formation, the volumes were pretty strong. Then consolidating, and especially in terms of the breakout, this breakout point, the volumes were exceptionally high, which means that this would now act as a major support for the stock, and we could look at the stock inching up, much higher returns from the short term. So this is how a classical bullish pennant formation looks like.
Right. Many, many thanks, Kunal. And that was today's lesson on our special segment, BNS and Pathshala, that Kunal takes every Friday. But on that note, stay with us as we step into a short break. Don't go anywhere. We'll get you the queries after.
You make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
If the normalization in the world will happen, demand which in a sense got destroyed will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
The long haul FII who looks at India as still a promised land for an consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets in Noon. Midway through the trading day, we help you catch all the trading action.
And get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at Noon every trading day only on ET Now.
Rakesh Junwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of
I
years
always
ago.
used to, I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader. Rakesh Junwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember you know, I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
In individual sectors.
What's the sense that you're getting on volume growth?
Just clarify this entire case.
What is it going to mean for the business?
What else are you looking at? It was clearly one of the biggest deals.
Here at ET Now, I've been getting you bit by bit.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you'll be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You should remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%. But we need more growth in international.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and this is the show where we get you all the questions answered when it's related to stock-specific ones. But before we get on board with asking your queries, let me first introduce our experts for today. We have Kunal Bothra on the technicals and Avinash Gorakhshekar on the fundamental side. A very good morning to both of you, Kunal, once again, as well as Avinash. Thank you so much for joining us on Buy Now, Sell Now. And Avinash, before we kickstart with the query segment, what a day it has turned out to be for the markets. A good jump we are seeing in the benchmark indices, 1,000-point uptick coming in for the Sensex as we speak. But, you know, market moves have been volatile, no doubt, of late. In this particular scenario, how should a retail investor, how can a retail investor protect its wealth?
Yeah, I think, good morning, Cheryl. Today's market has been very strong. I think if you ask me how should an investor protect his capital, I think first of all, I think if the market is volatile and if the investor is not willing to, be a part of this volatility, then it's better to go and opt the mutual fund route. I think that's a much safer way where volatility is much lesser. But if the investor wants to invest directly in equities, then I think he should stick to the large cap companies, especially the Nifty or the Sensex companies, because I think in this market, the large cap companies will offer a better protection in terms of margin of safety, in terms of the price appreciation. And most importantly, whenever they want to buy, it's always better to buy via the SIP kind of method rather than buying in lump sum. I think the markets will offer a lot of entry points, both on the downside and on the upside. But I think most importantly, they should have the patience and the conviction to stay invested for the longer term. So I think, all said and done, equity will provide decent returns, but they will come with volatility. So this is something which all retail investors should keep in mind, that the opportunity to make wealth is huge, but you need to take volatility on your stride.
Many thanks, Avinash. Stay with us as now we shift focus to our query segment. For those of you joining for the first time, Buy Now, Sell Now is a show which is your one-stop destination for all stock-related queries. You write to us. We are live on Facebook, YouTube, and the number flashing on your screen. But with that, we start our query segment. My first one is for you, Kunal. Raghav is writing to us. He's holding 20 shares in Eureka at 1,000. He's asking whether he can book profits in green.
Well, I don't track the stock, frankly, but then looking at the charts, I think it makes a lot of sense to book out profits over here.
Right. The next query that I have is coming from Akash Mathur, and he's saying that he has Infosys at the levels of 1506 and KPIT Tech at the levels of 605. He's saying for a good long-term IT portfolio, should I continue averaging these two stocks, or should I add one more IT stock and then start adding on to my portfolio, which consists of these IT names? Also, he's asking Avinash if you advise that he should add another IT stock to his portfolio, then which IT stock should he add?
Yeah, I think, Cheryl, Infosys is definitely a good, buy even at the current level. The kind of commentary, the kind of order book which the company presented post the Q2 numbers have been very encouraging. The company has also announced a buyback at around 1,800 plus rupees, but that is going to be an open market buyback. So that doesn't directly, benefit the, retail investor. But I feel that looking at the kind of tailwinds and the kind of opportunity which the company has mentioned, in fact, the revenue growth guidance has been increased. Margins have been, more or less been maintained at 21-22%. So I think he can definitely do an SIP here, provided he's got a horizon of at least 2 to 3 years. Normally SIPs don't work out for a very short time frame, but definitely he can do the SIP for a period of 2 to 3 years. As far as KPIT is concerned, this is one of those companies which has got a very large exposure on the electric vehicle space and has a large market in US and Europe. My sense is that he can average this company here also, because the opportunity for growth is very solid. They are sitting on a very healthy order book, and I think going forward, electric vehicles is going to be the future. So definitely here also I think there is a good opportunity to accumulate. As far as the third IT company which I think he should accumulate according to me is TCS. I think TCS is one of the larger IT companies. It's come down at pretty attractive levels, and I think looking at the kind of balance sheet strength, the kind of order book, TCS can also give him a decent return, provided he's got a 12 to 18 month kind of time frame.
Right. Good morning, Avinash. Adira joining in. This one's for you. Nageshwar is writing to us from Hyderabad. He's holding 1,304 stocks of NMDC at 136. He's holding them for the last 10 years. He's asking whether it's good to hold, exit before the demerger date.
See, I think my guess is that NMDC is a company where it's got a complete kind of dominance in the iron ore market, and as far as the balance sheet capital structure is concerned, that too is quite favorable. The demerger is definitely going to be a near-term trigger for the stock, because you get one free share of the steel company for every one share held in the existing NMDC share. My sense is that he should not sell the shares before the demerger. He should take the benefit of the demerger, because in all probability the steel company will also trade at a reasonable valuation, and obviously that could add a little more value to his overall stock price. But I think he has a very large quantity and he's been holding it for the last 10 years. So I think in that perspective, I think he should definitely consider booking out some profits once possibly the demerger happens, which will be happening in the next say 3 to 6 months. So that could be a better way to get some return on his capital, which is pretty old, and hold on to the rest of the shares.
This next one is from Tripta Aluwalia Kunal, and this one is for you. She's saying that she has greased cotton at a price of around 200 rupees per share. She's saying that she's currently incurring loss on this particular holding. What should she do with greased cotton?
See, I think you can look to hold or average at current levels. Now, the averaging quantity should be a bit lesser, because the stock is just showing signs of a short-term bottom formation. It's not that the stock is showing a mega bottom formation where the indicators are oversold on higher-term time frames. So I think you can look to average at current levels, maybe play out this bounce, which could probably take the stock back towards 175, 180 mark. The stock is trading into this range of 140 to 180. So I would say that make opportunity of this trading bet for greased cotton, try and ride this trend towards 180 levels, book out profits, and then look to buy back again, assuming that the stock corrects back towards this 140, 150 mark.
Right, Kunal, this one's for you. Divya is writing to us from Bangalore. She's holding Varun Beverages at 1,026, looking to invest from mid-term to long-term. Can she add more quantities at this point?
So I would not suggest to add at current levels, but then wait out for a consistent decline. I think the stock is just recently retesting the 50-day moving average. The only concern with Varun Beverages on the charts is the MACD and the RSI. They've come back into a breakdown mode on the daily time frame, which means that there could be possibility of another 5% to maybe at max 10% correction over the very short term kind of a time frame. So if you can probably time your averaging out maybe another 4-5% lower from current levels, that could be a better opportunity to buy.
Okay, this one is coming from Santi, and he's saying, Vinash, that he's holding Reliance Industries about 110 shares at around 2,373 rupees per share. He's saying that he has been accumulating it in SIP from 2,000 rupees levels, but he wants to know what exactly is stopping the stock from moving much more higher from the levels currently. Also, he wants to know whether it makes sense to continue to accumulate Reliance Industries. Also, if there's any positive triggers in store for the company in the near term. Avinash, if you could hear me? I believe...
Yeah, I can hear you.
Okay, yeah. So, what should he do? He wants to know whether it makes sense to continue to accumulate Reliance Industries, and is there any positive triggers in store for Reliance in the near term?
Yeah, I think for Reliance, most importantly, the 5G rollout is very important. I think possibly in December, the management has stated that 5G rollout will happen on a national India basis. So I think that is the near-term trigger. And as far as the near-term triggers would obviously be the kind of growth in the telecom business, especially as far as 5G is concerned. Obviously, the retail business is also growing very well. In all probability, over the next, say, 12 to 18 months, there are possibilities that the retail business could possibly see a kind of unlocking from the main parent company. So these could be the near-term triggers, but I think clearly, I think telecom and the retail business is going to be the near growth opportunity. I think the oil and gas business is going to be a steady cash cow. So nothing great is going to happen there. And I think the investor should at least take a time frame of at least 12 to 18 months here, because I feel that the stock is consolidating. And hopefully, I think for FY23 and 24, the markets could see better earnings growth compared to what the street expects. So that could lead to a significant amount of re-rating. So continue to hold on, but keep a time frame of at least 12 to 18 months.
This one's for you. Anand is writing from Gurgaon, and he specially asked me to ask you this question. He's holding 200 shares of Nerolac Paints at 490 per share. He's asking what the charts are indicating, and also if he can add more after the recent dip or wait for correction to switch to Berger or Asian Paints.
So I believe shifting towards maybe Asian Paints could be a better opportunity. I think Asian Paints has been a more formidable chart. The long-term patterns have been attractive for Asian Paints. Consigned Nerolac on the other hand, I think that stock has shown signs of pace as well as recovery. But then the recent charts have been a bit more skewed towards more on the selling side. The stock has broken below its one of its major patterns, Ichimoku pattern, on the weekly and the monthly time frame. So that could probably add a bit of a concern for the stocks for consigned Nerolac over the medium to long term. So I think in that regards, it's always better to shift towards Asian Paints. But again, I would believe that buying or shifting maybe another 4 or 5% lower from current levels could actually be a good opportunity. So you have to time your shifting as well. I would not suggest the shifting at current levels, but possibly if Asian Paints say corrects back towards 3,000, 3,100 mark, that could be a much better opportunity to buy.
All right, this one is from Ramachandran V, and he's saying he wants to add Century Enka. He's saying that he wants a fundamental view on this for the next 3 to 4 years, and also he wants to know whether is it a good price to start adding gradually in his portfolio. What's your take on Century Enka, Avinash?
See, I think Century Enka is largely into nylon filament yarn and nylon tire cord, and both these products are doing pretty well. The company is also showing a decent kind of performance, very little debt on the balance sheet. So I think if the investor wants to accumulate this stock, I think he can do it at the current odd levels. Over the next, say, 1 to 2 years, he could definitely expect a very decent risk reward. My sense is, I think an upside of at least 20 to 25% over the next, say, 12 to 18 months is possible. So he can accumulate at the current level.
Right. Ravi Teja is writing to us from Hyderabad. He's entered VBL at 1,072. He's looking for about 5 to 10% profit. He's asking what can be the target price to be achieved. Avinash?
Which company is this?
VBL.
Which is basically Varun Beverages?
Right, Varun Beverages.
See, I think clearly, I think to give a 10% target, as of today would be a little difficult. But I think if the stock can be held on for a slightly longer time frame, then I think this is one of the front leaders in the beverage market. They have the sole, franchisee of Pepsi. And I think despite the fact that, the stock is currently, little range bound and may see a little bit of correction, if the investor can hold it for the next 3 to 6 months, then I think you could expect very strong numbers, because the management has said that, volumes on ground have improved significantly, and that could get obviously, reflected into better earnings numbers, at least for the September and for the December quarter. So typically, I think one can take a 3 to 6 month horizon and then expect at least maybe a 10 or 12% up move. But this is definitely a long-term stock. So I think one should not try to trade in this stock at these levels.
All right, on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. But when we come back, we will continue with the journey of taking your stock queries. So viewers, don't go anywhere, and experts, hang in there.
आग को फैलने से रोक।
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
The rupee depreciation is only helping further than the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that, नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although it's difficult to predict, return will be more than 10 lakh.
Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply. The Nifty Bank Index is down. Momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's a daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here on ET Now.
We start trying to make a comeback. It's a smart start.
Sensex is up.
Welcome back. You're watching Buy Now, Sell Now. Remember, this is the show where we get all of your stock queries answered live. So let's continue with taking your queries then. And the next query that I have is coming in from Manish Raju. And this one is for you, Kunal. He's saying he has 500 shares of BLS International at a price of around 221 rupees per share. He's saying he's looking to double his investment, but the stock is currently consolidating around 275 to 280 levels, and it's not going below that. So what sort of a strategy should he have in order to add some more of BLS in his portfolio, and when can he do that actually?
See, I think yes, the stock has done reasonably well. Also, I think it's consolidating. The manner in which the stock has entered into the consolidation is also quite strong. I think last month, mid of last month is where you've seen a big volume jump up for BLS International, and from there on the stock has consolidated. Now, typically when a stock enters into a consolidation, the tough phase of the markets, we expect the stock to stand to be an outperformer when the markets get into a strong uptrend for itself. So there's a possibility that from here on, maybe BLS could stand to outperform and get into a breakout mode back again. So I think at current levels, 280, 85 could be a good point where you can look to start averaging out.
Right. Avinash, this one's for you. Mahalakshmi is writing to us from Hyderabad. He's holding 30 shares of Coforge at 4,100. He's asking whether he can add some more, average the price, or he may shift to TCS Infosys for the long term, of course.
See, I think Coforge also definitely has a decent kind of earnings trajectory, and our sense is that, if the investor has got a 12 to 18 month horizon, then definitely Coforge can be accumulated. But I think, my sense is that TCS would present a better kind of a risk reward at the current odd level. So I think considering the choice between both the two, I would prefer, he can accumulate TCS, again keeping a 12 to 18 month time frame where the risk reward could definitely be much better than Coforge.
The next one that I have is coming in from Ram Sankar Chandrasekharan, and this one also is for you, Kunal. He's writing to us from Germany, and he would like to know if it is right time to enter into HAL for the longer term of 3 years plus, or should he wait for consolidation? For 3 years plus, if you can talk about HAL, we've already seen a massive run-up in all of these defense names. Do you think now is the right time to buy it?
See, I think it's a good time to buy or have HAL, in your portfolio. But again, the timing may not be absolutely perfect because the stock has seen a very recent kind of a run up. Now, in this recent run up, the stock has gone through overbought territories where the RSI has gone to levels of maybe 80, 85, 88 plus on the daily time frame. And when you see a cool off of these kind of overheated RSIs, we expect the stock to get into a multi-week correction. It's already gone through a 10% correction, but there is always a possibility that it can correct by another 10% more. So a much better strategy is to start nibbling at current levels. So, for example, if you're looking at buying 100 quantity, for example, then you can look at buying maybe 30% or 35% of your expected quantity at current levels, and at every 10% you can keep on doing this averaging phenomena till the next 20% from current levels.
Right. Kunal, this one's for you. Denny is writing to us from the United Kingdom, holding Sun Pharma. He's asking about the October expiry and whether he should hold or exit today.
I think 980 was the target which I had given for Sun Pharma some time back. The stock seems to have come back to that 970 to 975 mark. Today's high was approximately at 977 for Sun Pharma. So we are nearing a point where possibly the stock may get into a bit of a topping out formation. So if you're already sitting on profits, assumingly, then I think closer to 980 levels is where you should look to book out.
Okay, this one is coming from Jai Krishnan on Polyplex. Has this counter at the price of around 1,898 rupees per share. For the medium term, hold, sell or average? If average, at what levels? Kunal, I know we've spoken about Polyplex earlier also.
So I don't see the major reason to average the stock at current levels. We were discussing this earlier that the stock has gone through a correction. It's below the 200-day moving average. The correction is intensified. Similar to what I mentioned for a couple of other names where the RSI is overheated. The stock also had an overheated RSI somewhere around 2,500, 600 mark. I think in March, April 2022, and from there on the cool off has just gotten a bit more steeper. I believe that current levels may not be best levels to buy the stock. You have to wait out for maybe one more leg of correction to shape up. Say closer to 1,700 mark or 1,600 levels could be a point where you can look to start buying the stock.
Right, Gopi is writing to us from Chittor. Hi Gopi, he writes to us pretty often. He's holding Motherson with 35% loss. He's asking whether it's a good time to sell or hold. Avinash, you want to take that?
Yeah, I think from a longer term perspective, I think this company has the potential to bounce back, and I think near term correction should be used by the investor to actually accumulate further. We believe that over the longer term, this business has a very strong future. The business model is sustainable, and I think if the investor is willing to wait for the next say 12 to 18 months, then I think definitely a better risk reward could emerge. So I think he can hold on to the current quantity. He could even average a little more, but keep a time frame of at least 12 to 18 months. Yeah.
All right, this next one that I have is coming in from Kastub, and he wants to know about Whirlpool India, Kunal. He has about 20 shares at the price of around 2,100 rupees per share. Now he wants to know how does the stock look on the charts. Technically, is it sound one, and also can he look to average at current levels?
I would suggest not to average at current levels. In fact, if possible, look to exit the stock, maybe not at current levels, but then wait for a mild bit of a bounce back from the current levels of 1,600, 1,570 approximately for Whirlpool. My belief is that the stock has broken some major support points on the indicators front on the long-term charts, on the monthly charts, on the quarterly charts. There are big breakdowns which have happened in terms of indicators that generally doesn't augur very well for the stock price. So ideally, you should look to exit the stock on even smaller amount of rallies which you get.
Right. Sampath is writing to us from Delhi, holding 200 shares of Canara Bank at 180. Can he please wait? He's asking whether he should wait for some more time. Kunal, you want to take that?
Yeah, I think you should hold on to Canara Bank. In fact, my view and my belief is that the stock could be heading towards the 260 mark. That's been the modest target which I would probably outline for Canara Bank. PSU banks, overall banking theme have been looking very attractive from a medium to long term play. And since you bought at 180 levels, I think you should stay put.
Right. This next one is coming from Dasarathi, and the question that Dasarathi had asked was about Sun Pharma, I believe. Okay, yeah, he has about 150 shares of Sun Pharma at a price of around 547 rupees per share. He wants to know whether he should continue to hold on to this for the longer term, or Avinash should look to book profits now, because given the fact that we've seen massive rally in Sun Pharma, and do you think this rally in Sun Pharma is here to stay?
My sense is that I think he's entered Sun Pharma at a very attractive price, and I think he should hold on, considering the fact that the focus of the company will be on the specialty segment, and I think Q2 numbers which are expected to come out should be quite strong. Most importantly, what is the kind of growth outlook for the specialty business, and obviously the US markets going forward is going to be very crucial. So as of now, I think he should not sell out. He should wait for the Q2 numbers. Whatever management commentary comes in would be very crucial. My sense is the commentary would continue to be positive and strong, and obviously the stock can see better returns if can be held on for the next 1 to 1.5 years. So continue to hold on, and there's no need to hurry to book profits currently at the current price.
Right, Kunal, this one's coming for you. Amit Kumar is writing to us, holding 200 shares of Adani Wilmar at the level of 800 rupees. Wants to average the stock. Please suggest the levels to average.
I think you should look to switch and maybe switch towards a better, less volatile, FMCG name. So I would recommend maybe something like Tata Consumers. That could be a better opportunity to try and shift towards. Or if you're looking at large cap names, then I think HUL could be a formidable name.
All right, actually with that we'll have to kickstart with the rapid fire for all of our viewers who are wondering why. Remember that earnings season has started, and yes, we have a management that will be joining us very shortly. So let's kickstart with the rapid fire and try and take as many queries as possible. Shiva, this one is coming in from Indumati. Anand Rathi Wealth, is it a good buy at current levels given the fact that its earnings are out now? What's your take on this one, Avinash?
I think one should definitely hold on. I would believe that we see a target price of around 800 here. Continue to hold on.
Kunal, Shanti is writing to us asking for any small cap picks for short term, return 20 to 30%.
I'm not sure for small cap, but then one of the stocks which I'm bullish on is West Coast Paper. I believe that the stock looks attractive for at least the next 3 to 4 weeks.
Okay, Samir is writing to us from West Bengal. Is Trent a good investment idea? What's your take on this one, Avinash?
I think definitely, this is definitely a good idea if one is invested for the next couple of years. A very strong retail enterprise and belonging to the Tata Group. So continue to hold on, and any tip to be used as a buying opportunity.
Right. Kunal, Vivek's writing to us, ICICI Bank purchase price at 770, 100 shares. Should he sell to avoid losses? He's been holding for the last 3 to 4 months.
I think you're already sitting on 15% profits approximately. You should definitely look to hold.
Okay, Chandan wants to know about Federal Bank. The stock is at 52-week high levels. Results are awaited today. He's already making profit. Should he book profit or look to hold on for the longer term? What's your take on this one, Avinash?
I think he should hold on because for the first time, in the business update, the company has given a very strong business outlook. So I think wait for the Q2 numbers and then take a call. Currently hold on.
Right, Avinash, Gurunath is writing to us. He's bought October expiry TCS 3,140 at 69. Can he hold or book losses? Avinash, this is also you.
Is this for futures or for cash?
This is for futures.
Frankly, I don't track futures, so I won't be able to answer.
Right, Dheeraj wants to know about Wipro. 37% loss is what he's making on his holding. Kunal, what should he do? Should he book out or stay put with Wipro?
I think stay put, but possibly over the next 1 or 2 months, if the stock corrects by another 10%, look to average out.
Right, and on that note, we're completely out of time for a rapid fire segment. Avinash, Kunal, thank you so much for being there today. But don't go anywhere, viewers. We're coming back from a short break.
It's Dhammaka Diwali on ET Now, and we call it
More than 400 points. Management is now with us. Overvaluation case. See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now, break free.
When you are India's most experienced